This news update has been compiled with content from socialistworld.net.
I'm Nick Schillingford, and this is a 3-minute news update. The world economy appears to be sliding into a double-dip recession following a feeble recovery in 2010. Until recently, signs of a slowdown which appeared in the second quarter of 2011 were regarded by many capitalist commentators as merely a soft patch. But the outlook changed dramatically with the convulsions in global stock exchanges during the first 3 weeks of August. Trillions of dollars were wiped off the value of shares, with banks being especially hard hit. The volatility and sharp decline reflect fear of an economic downturn and collapse of profits in the future. Huge amounts of money have been taken out of company shares and transferred to so-called safe havens, such as government bonds, gold, and cash deposits in Switzerland. The stock exchange volatility was triggered by a series of events, all interconnected and symptomatic of an underlying slowdown in the global economy. For example, the confidence of investors internationally was shaken by the struggle between Barack Obama and the U.S. Congress over raising the country's debt limit and the subsequent downgrading by the S&P of the U.S. government's credit status. The battle over the $14.5 trillion national debt highlighted the dysfunctional character of the U.S. political process, showing that a minority of Tea Party Republicans appeared ready to plunge the country into default rather than accept even very limited tax increases on the wealthy. Also, by early August, it was clear that the July 21st deal agreed by Eurozone leaders had far from resolved the Eurozone crisis. Renewed fears of defaults in Eurozone government bonds were also leading to doubts about banks believed to be holding large quantities of sovereign debt. But the capitalist class internationally faces not only an economic crisis, but a political crisis of economic policy. Bank bailouts in 2008, 2009, and stimulus packages prevented a catastrophic collapse of the world economy on the lines of 1929 to 33. But the solvency of some banks is now threatened. Stimulus packages in the US and Europe have run their course. Priority is now being given to severe austerity measures in order to reduce deficits and accumulated debt. This is clearly having the effect of depressing growth, which is likely to lead to even higher deficits in the future. Keynesian-style stimulus packages, particularly if they involve infrastructure projects which create employment and boost unemployment benefits, would mitigate the downturn. Sections of big business are now beginning to call for such measures. Keynesian measures, however, would only be a short-term fix. They would inevitably increase the indebtedness of states, and such debt could only be paid off on the basis of sustained growth. Under capitalism, sustained growth depends on sustained investment, which will only take place if the capitalist investors believe that they will make adequate profits from their investments. In this period, capitalism cannot secure the combination of high investment levels and sustained productivity growth that would be needed to combine rapid growth, good wages, high social spending, and big profits. Today, we are facing the bleak age of a crisis-ridden system.
This has been a 3-minute news update.